Hello everyone, you're watching video Forex report by Liteforex. We will now discuss the prospects for the major currencies for the last trading week of 2018. As you can see, the US dollar index continues to trade near the highs of the year. The risk sentiment remains fragile. Traders are worried about political instability in the United States. They have also fears about global economic slowdown. And generally, the US dollar remains an attractive currency. The Fed raised the interest rate in December by 25 basis points in line with the market's expectations. This was the fourth rate hike of 2018. Other central banks fall behind the Fed in tightening monetary policy, and that helped the US dollar to stay in the market's demand. However, there are concerns that higher borrowing costs will hurt the United States economy next year, and as a result, the USD may become vulnerable in the upcoming months and weeks. In addition, there are rumors that President Donald Trump privately discussed dismissing the current head of the US Central Bank, Jerome Powell, and certainly this will lead to a big collapse of the market and a big spike in volatility if Trump really decides to fire Powell. And also the US government may remain in partial shutdown until January 3rd, as Congress and President Trump failed to agree to a spending bill, and this, of course, is increasing uncertainty for the markets and is having some pressure on the USD. We can see that although the US dollar is near highs, we don't see very strong upside momentum. There is divergence in indicators, so American currency may later try to correct to the downside. Let's have a look at the economic calendar at liteforex.com. We will see that actually, as it is the last week of the year, there are only few important events. There will be bank holidays in the major economies on Tuesday and Wednesday, and on Monday today there is also bank holiday in Japan, New Zealand and Germany, so trading volumes will be extremely light this week. This may lead to some big swings on low liquidity, because some players may get a chance to influence the market. So everything is still possible, and you may still make a lot of interesting trades this week. In terms of the economic data, you can focus on the US consumer confidence and new home sales figures on Thursday. This will be the most important releases of the week. Also on Thursday, there will be a speech of the Bank of Japan's Governor Kuroda, and some minor data releases on Friday as well. If we have a look at the charts of other currency pairs, starting with euro dollar, we will see that on the weekly chart, still the euro dollar has support in the area of 1.1310. This is 200-week moving average and a really powerful support. This is the yellow line on the chart, and we have been talking about this line for already several weeks. Indeed, it is providing a good support. MACD on the weekly chart is also supportive because the indicator is not going down. It formed some kind of bottom here. We can see that on the upside, the room for euro dollars movement is limited, and as the yellow line, the moving average, supported the euro dollar on the downside, the same way the 50% Fibonacci level around 1.1450 limited the upside for this currency pair, because we do not see any weekly close above this level since October actually. And there is also a descending resistance line connecting the highs of 2018. It also limits the room for the euro's appreciation versus the US dollar. As a result, with both strong resistance on the upside and strong support on the downside, we can assume that price action in the upcoming days will take place between the resistance and support levels and be sideways. On the daily chart, we can see the picture in greater detail. We can see this attempt of the euro dollar to get higher last week, but it was limited by 100-day moving average at 1.1483. On Friday, there was a bearish engulfing candlestick, and the pair closed below 50-day moving average. Now we are trying to recover, but a resistance will take place at 1.1410, 1.1450, and 1.1480. Advance to these levels may form the opportunity to enter short positions. Also, we are now at the middle of the range. We can see that on the 4-hour chart, moving averages are horizontal below the price around 1.1360, and a decline below support provided by these moving averages, the fall below 1.1355, will make the pair go down to test 1.13 level. So the sideways trading is in place, and no major news for the euro and for the US dollar. Political events may be the biggest driver. The British pound has recovered versus the USD a bit last week. We can see that there is some minor divergence on the weekly chart. The latest low formed at the start of December wasn't confirmed by the MACD indicator. Still, there is significant resistance around 1.27 mark. The pair has merged into this resistance line and made several attempts already to test it, but was sold. If the pound manages to get over 1.27 in the thin holiday trading, then the recovery may continue to the level of 1.2760, the high of December 10th, and the Fibonacci resistance around 1.2830 will be the upside target for the British pound. Otherwise, of course, a reversal and decline below the short-term support around 1.26 will open the way down to the lows the pair visited earlier this month, and the lows are located around 1.2480. British pound is driven by Brexit, of course, mostly, and we expect a very volatile January for this currency, because nothing has been decided in December about the Brexit deal, and in January this topic will continue. Dollar yen made a spectacular decline last week. It fell below 200-week moving average. It fell below the support line, and it ended up above 100-week moving average, located just above 111 mark. This week opened with a gap to the downside. We are now below this moving average, And we can see that there is Fibonacci level at 110.75. Decline below this level will open the way down to 110.30. Here we have 50-week moving average, and it might provide support. The next Fibonacci level is located at 109.60. On the daily chart, we can see that right now there is some support at 110.90, and if this line manages to keep the pair from declining, then an advance above 111.50 will be necessary for the pair to get an ability to correct to the previous support and now resistance around 112.25. Japanese yen strengthened not only versus the US dollar, but it made a great advance versus risk-sensitive currencies like New Zealand dollar, Australian dollar, and Canadian dollar. Let's have a look at this on the example of the currency pair New Zealand dollar Japanese yen, which declined sharply. We can apply Fibonacci, and we can see that the pair closed on Friday below the 100-day moving average, below 61.8 Fibonacci, and this increases the chance that the decline will continue further to levels around 73.75. 78.6 Fibonacci level is the next target and a feasible level for the pair to reach. Given the fact that the market's risk sentiment is mostly negative, this downside scenario looks pretty possible. If the pair gets above 75, then there is a possibility of correction to the upside towards 75.50 level, and finally the strong resistance will be located around 76.35. Australian dollar, US dollar reached the lows of 2018, located in the area of 0.7040, 0.7020. Of course, the loss of 0.70 will open the way down and make Australian dollar make substantial declines. As long as we stay above 0.7040, there is some room for correction to the upside with resistance found at 0.72 mark. New Zealand dollar also fell sharply versus the USD. The pair found some support at Fibonacci level of 0.67. The loss of it will make the decline continue to 0.6630. Resistance is located at 0.6760. Gold strengthened last week as a refuge asset. Now we need to notice that there is a resistance for the precious metal located around 1266, 1270. It is the top of the recent channel, and also the weekly moving averages are located at this point. Still, we expect the bullish trend for gold to continue in the medium term. So for now, we just need to overcome these resistance levels to get to the next target at 1287. Decline below 1260 will lead to a correction of the price to the support, which is located around 1250. We can find the daily moving average here. And finally, let's say a couple of words about oil. Brent made a big leap to the downside last week and fell below Fibonacci level at 56.75. The next Fibonacci level is located around $50 a barrel mark, and it is likely that after some minor correction, Brent will continue to face resistance at 50% Fibonacci level, and uh, the market will likely sell the recoveries of the commodity, and decline to the 50 level is very, very feasible for oil, which is continuing this sharp, abrupt downtrend. US dollar Canadian dollar currency pair rose to 1.36 mark on the market's negative risk sentiment on the decline in oil, which is one of Canada's main exports. If oil recovers a bit, the pair will correct to the downside to support at 1.35, 1.3440. If we break about 1.36, natural level to look at will be located at 1.37. This is all for today. Thank you for your attention. Visit liteforex.com and trade with Liteforex.